I recently made a video about a 3-to-1 matching executive retirement plan called Kai-Zen. It is a unique individual retirement plan that will increase your retirement distributions by 60 to 100% using leverage, where a lender matches your 5 annual contributions 3-to-1 at LIBOR plus 1.75%. This week, I want to introduce employers to Tri-Zen, which is similar to Kai-Zen. It's a unique pre-tax employer-sponsored retirement benefit plan that an employer can contribute to on behalf of an employee in lieu of bonuses, pay raises, or signing bonuses, etc. The employer's contribution to the plan is matched 3-to-1 by one of our 14 lenders at LIBOR plus 1.75. This is a 15-year plan for the employee, but the employer makes only 5 annual contributions, and the strategy is the sole security for the loan. Almost every study indicates that a large percentage of people, including 90% of high earners, have not saved enough to maintain their lifestyle in retirement. And high income earners need to save even more for retirement over and above what Social Security and their qualified plans like 401k or IRA would provide. Traditional employee-sponsored benefits are a huge expense, but Tri-Zen allows employers to offer this ideal benefit plan to their key employees without increasing costs. Because Tri-Zen is not a form of compensation to the employee, but rather a loan, employer contributions are an asset instead of an expense, because it falls under IRS tax code 1.7872-15, otherwise known as loan regime split dollar. I'm not going to go into the details, but you can see that it's kind of complicated. But Tri-Zen takes care of all of this so you don't have to. Employer benefits. 3-to-1 leverage, only 5 annual contributions. The contributions are pre-tax. There are no FICA costs, no ERISA reporting, simple administration. It can be selectively offered to only certain employees. There are no contribution limits, no loan documents, no interest payments, no credit checks or personal guarantees. For the employee, the benefits are 60 to 100% increase in retirement distributions from the 3-to-1 match. The contribution is not taxable to the employee. They get market-like returns with zero risk to stock market downturns, tax-deferred growth, tax-free distributions in retirement, tax-free death benefit that can also be accessed while living in the event of a chronic, critical, or terminal illness, or the need for long-term care. No contribution limits, no RMDs, no loan documents, interest payments, credit checks, or personal guarantees. And their account is protected from lawsuits, creditors, and bankruptcy. You know, the average 45-year-old actually needs to save 35% of their income in order to retire comfortably. And contrary to popular belief, spending does not drop at retirement because it's just spent on different things like health care. 1 in 7 Americans 65 years and older will become disabled for 5+ years. And according to Fidelity, an average retired couple age 65 in 2020 may need approximately $300,000 saved, and that's after tax, just to cover healthcare expenses in retirement. Even worse, most benefits don't cover or only partially cover certain health conditions. In addition to potential disability, long-term care is an essential for 41% of Americans before the age of 65, with the average cost of $75,000 a year. The Tri-Zen strategy can add substantially more funds to your retirement plans while helping protect you in the event of future medical expenses. People are worried about the death of the primary breadwinner. Approximately 70% of U.S. households would have trouble meeting everyday living expenses within just a few months if the primary wage earner were to pass away today. Up until recently, this strategy has only been available to the ultra-wealthy, but now it's available to those with an annual income of at least $100,000 who are in good health, unless you have 15 or more participants, and no older than 65. So let me introduce you to Tri-Zen.
So one of the biggest concerns we found out from employers today in hiring employees is retention. Typically what ends up happening is we have to offer them employee benefits to come work for us, and we want those people to stay with us for a long period of time. When you offer some type of employee benefit, if your average age workforce is 40, you put that benefit in place, you have to commit to that benefit for the next 25 or more years. And that's a long-term commitment for a company to take on. So one of the things that we put together was a program called Kai-Zen, so that that employer could take the same dollar and put that into a benefit package that would add additional money to it without the employer having to increase the amounts that they were willing to spend on each of those employees. Imagine if you're in a situation where you've got an employee that's trying to decide between your firm and some firm down the street. Both firms are going to be offering that employee the identical salary. Both firms are probably going to be offering some type of 401k with some type of match, and both firms are offering health insurance. And at firm A, they're also going to offer a bonus. At company B, you get all the same benefits, the salary, the 401k, the health insurance, and you get the same $50,000.
Taking that same $50,000 and adding that to a strategy that offers a death benefit, and that death benefit can be also used while you're living in the event that you needed it for a chronic illness, something like a long-term care need or needing assistance with dressing, bathing, toileting, transferring, things like that. You could also accelerate that death benefit up front today in the event that you needed it for a terminal illness. With this strategy, you can use the money up front to help pay for the experimental treatment.
And the money growing in there is going to give you, on average, 80% of the upside of the market without any market risk.
You can grow the money in the account tax deferred, and you can access the money using tax-free withdrawals. The plan only has 5 contributions, and those 5 contributions are matched in the first 5 years by the bank, and years 6 through 10, the bank funds 100% of it, giving you a 3-to-1 leverage without financial underwriting on the loan, and a borrowing price of LIBOR plus 1.75. Unlike other types of loans, the cash value is the sole collateral for the loan, giving you significantly more supplemental retirement income than you would be able to get on your own.
Now, if you're an employee and you had a choice between basically the same dollar amount, but the difference in the benefits, which plan would you choose?
If you're interested in learning more about Kai-Zen and Tri-Zen, I would suggest you first watch my video on Index Universal Life up here. It's about 25 minutes, but it's necessary for you to understand how they work. You can watch the Kai-Zen video up here as well, And I'll put a link to both of those down below. Then please see the link to the application to get more information below. And as usual, if this video was of value to you, please give it a thumbs up, comment, and subscribe.